Hi, I'm Richard Murphy, and this is the 25th in the video series on the importance of tax transparency that I am hosting and which is being made jointly by the University of Sheffield, where I work as Professor of Accounting Practice, the Global Initiative for Fiscal Transparency, and the International Budget Partnership. In this video, we are looking at how a tax authority or government should account for the tax that it collects each year. Planning to collect tax and putting all the systems in place to ensure that this is possible is essential. As we have discussed, being open and accountable for those processes is key to tax transparency. We know that when there is tax transparency, when governments operate transparently and demonstrate accountability, people are more willing to pay taxes, recognizing the benefits their contributions bring. At the end of the day, though, everything a tax authority does is about actually collecting the tax legitimately owed to the government to which it is accountable. It is, therefore, essential that a tax authority or government prepares accounts showing just how much has been collected. As importantly, those accounts must include sufficient contextual information to ensure that those using them can properly understand their significance. Saying this, it's important to recall who needs this information. The tax authority itself will require detailed accounts that include extensive data to support its operations and decision-making. It is, however, important to recall the commitment in GIFT Tax Transparency Principle 6 to taxpayer confidentiality when saying that. The level of detail needed by the tax authority for internal purposes could inadvertently compromise taxpayer confidentiality if shared externally, even with elected politicians, including those serving in government. The figures that the tax authority requires for its own internal management purposes might, in that case, not be suitable for use by the government or other relevant parties needing information on tax collected. However, in alignment with the principles of tax transparency and the need to share information widely, this challenge can be addressed. Applying methods to anonymize sensitive information before publication ensures that confidentiality is preserved whilst meeting the transparency goals essential for public trust. So, who are those relevant parties who need information? It is worth recalling that they might include, as we suggested in video 5, these parties: the government, other legislators and politicians, local governments and their legislators, taxpayers and other residents of a jurisdiction, civil society in all its forms, including the media, who can play an important role in holding a government to account, international organizations. What information might these groups want? This will include budget for the year, which was an issue we have already discussed in video 14. A full analysis of tax collected in the year, preferably analysed so that direct comparison with both the budget for the year and data from earlier years is possible. A summary of government expenditure, so that the consequence of the sums collected in tax for the overall fiscal management of the economy can be appraised. Support notes to explain this information. These might well be narrative discussions in many cases. The support note should also explain the following: long-term trends. 5, 10, or even longer period summaries are useful in this regard. Variances from budgets, with reference to tax gap and tax spillover assessments if these have been undertaken. We explain these in later videos in this series. The social consequences of what has happened. This discussion would be best framed in the context of the goals specified in the tax strategy of the jurisdiction, as discussed in video 13 in this series. For many groups, this might well be the most important part of the report. An audit report is also essential, and it must be from an independent government auditor or even a third-party firm of auditors expressing an opinion on the reliability of the data and explanations supplied in the report. It is important that any report of this sort meets minimum standards, which should be consistently applied. A number of internationally recognized frameworks exist for this purpose, which are discussed in GIF's publication Making Tax Work, of which I was a co-author. We do not endorse the use of any one system, but stress that the system chosen should suit local needs, ensure that the needs of all the users, as noted previously, are met, deliver data in a format that the non-specialist, which most users of this data will be, can understand. Ideally, meet international data classifications such as those promoted by the IMF, so that ease of comparison and interpretation is promoted. We think that this is fundamental to tax transparency. Consistency of data presentation is also key for the same reason. What we stress is that whatever system for reporting is chosen, comparison between the current period and prior periods is important, so that progress can be appraised. Comparison with budgets is also important, so that outcomes can be compared with expectations. Variances, which are nothing more than the difference between two numbers of the sort just mentioned, are noted and are expressed either numerically or in percentage terms. The data provided should be in a format consistent with the budget for the period and be provided in as much detail as that budget, including by providing individually identifiable data for each tax. Discussion of variances should concentrate on what went well and what did not work as planned. This is also true of the discussion on the social, economic and fiscal goals implicit in any tax budget. We have highlighted the importance of understanding tax reliefs and exemptions when it comes to tax transparency. In video 24 and in GIFT Tax Transparency Principle 12, we suggested that knowing how much tax is not collected and why is almost as important as knowing what tax is paid, because the two together combine to deliver the overall goals of the tax system. For this reason, we think that the accounts for a tax system should include the estimated total cost of all major tax reliefs compared to the budget for the year and the previous year, an explanation of major variances from the budget for the year and prior years, an explanation of whether the exemptions, allowances or reliefs were believed to achieve their goals in the year, and if not, what is going to be done about it. Creating data is important, but communicating it is at least as important. This is especially true of accounting information, of which a lot of people are quite afraid in my experience of more than 40 years. It is important to remember when preparing the accounts for a tax authority that most people have no training in accounting, are at least a little bit frightened of anything to do with numbers and arithmetic, may not understand percentages very well, or not at all, are much more competent reading the written word than they are numerical data. These factors have to be taken into account when accounting for tax. This is one reason why alternative presentation methods, including the use of easy-to-read graphs, can be important in such accounts. It is also important to understand that users of this information will have different appetites for complexity. While some users may be somewhat intimidated by data, there will also be experts who require open, unprocessed information to conduct tailored analyses, necessitating access to detailed and disaggregated datasets. These two extremes of users, as well as those in between, need to be catered for. For instance, some will just want information for each tax, with no deeper analysis being required. Others will be looking for a more detailed analysis, for example, income tax paid by people on different levels of income, or corporation taxes paid by companies in different sectors of the economy with regard to that tax, or VAT paid on different types of consumption, or excise duties paid by type of product to which they are applied. Others will require open, unprocessed data, allowing them to use it to conduct their own analyses. Generally speaking, if a budget required the consideration of these issues be taken into account, then the accounting data must do that as well. But summary data should also be made available. There is good reason to invest considerable effort in identifying target audiences and understanding their information needs so that published information is accessible, relevant, and impactful. The appropriate communication formats need to emerge from this consideration as well. They are likely to include print, websites and portals, including open data at different levels such as PDFs, interactive graphics, machine-readable datasets, and APIs enabling data experts to run queries and reuse data. Social media, especially for summary data. YouTube and other similar platforms taking local factors into account. And more traditional methods may be required in countries where internet access is limited. The yield from such efforts will be seen in increased tax morale. We also stress the importance of explaining this accounting data so that awareness is raised, questions are answered, debate is encouraged, the opportunity to participate in tax-related issues is made clear. This is a fundamental goal of the tax transparency agenda. Accounting might not excite many people, but tax impacts just about everyone's lives, and as a result, they have a right to know about it. A jurisdiction and tax authority that is committed to tax transparency must meet people's needs for relevant, reliable, and transparent data on their tax system. That is what accounting should do.